Let's keep it going with oil. Now, oil built West Asia's power, but today it may be turning into its biggest vulnerability. As tensions escalate, the United States is tightening its grip around Iran economically and militarily. And now the question is, will oil decide the next move in this conflict? West Asia's global influence has long been anchored on oil control over energy routes, especially the Strait of Hormuz. That has shaped geopolitics for decades. Nearly 20% of global oil passes through this narrow corridor, but now that leverage is under strain. After Iran's Hormuz control sent global commodity prices soaring, Donald Trump is using oil as a pressure tool. A tightening economic blockade is targeting Iran's ability to export crude, choking its primary revenue stream. Trump has publicly claimed that Iran is facing losses up to $500 million daily amid the ongoing conflict. For a country that is heavily dependent on oil exports, this is not just pressure, it's economic suffocation. U.S. naval deployments, including aircraft carriers positioned across key maritime routes in the Gulf, are effectively tightening surveillance and control over shipping lanes. Critical Iranian ports along the Persian Gulf coastline, including terminals that handle crude exports, they are now operating under heightened risk and restriction. But Tehran is pushing back. Iran has made its stance explicit. No negotiations unless the blockade is lifted. This creates a hard deadlock. The U.S. wants pressure before talks. Iran wants relief before talks. This is where oil becomes the central battleground. Historically, energy dominance gave West Asia the leverage over the world. Today, that same dependence is exposing vulnerabilities. If the blockade continues, Iran's revenue could shrink further. Domestic economic stress could intensify. Pressure to negotiate may increase. But there's a flip side as well. Disruptions across critical choke points have already sent global prices sharply higher, impacting economies far beyond the region. So the stakes are global. Too much pressure risks escalation. Too little pressure weakens the leverage. The question now, will oil, which was once West Asia's greatest strength, become the force that compels a deal? To understand all of these oil moves, we are now being joined by Jayant Krishna, Senior Fellow at Center for Strategic and International Studies, live from New Delhi. Mr. Krishna, thank you so much for joining on the broadcast today. Now let's talk about oil and the prices. Now, US and Iran remain deadlocked over Hormuz. This is after Trump, of course, extended the temporary truce indefinitely. But what does the deadlock mean for crude, as it seems to be trading more on the Hormuz standoff at the moment, right?
Yeah, so situation continues to be very grim despite the extension of the ceasefire. If you look at the global oil market, it's facing a very, very severe disruption. Due to the de facto closure of Strait of Hormuz. And if you look at the Strait of Hormuz, I think your program mentioned that 20% of the world oil flows through it. But if you look at the crude oil, then the percentage is almost 34%, one third of it. If you include natural gas and other petroleum products, then it's 20%. So I think it's a huge thing. And for countries like China and India, it's even worse. For India, for example, almost 80% of our crude oil comes through the Strait of Hormuz and 45% of the natural gas. So I think the daily production outages this war has given are of an order of about 13 million barrels per day. And not only that, another 13 million barrel per day is because of the US blockade of Iranian oil. So I think so I think it's a huge loss. It's a war which nobody will eventually win, and both the parties, or all three parties, that's Iran, US, and Israel, need to realize this. That's what I feel.
Right. Mr. Krishna, that's about the supply disruptions and the impact world over as well as Asia. But if we talk about prices, oil has been testing that $100 per barrel level. In fact, in recent trades, that's the level that we've been sticking to. But what's the outlook going forward, say in the last week of April? What is the price that you're looking at?
So if you look at the larger picture, Brent, which is the most authentic benchmark for crude oil, it's been very, very volatile. If you look at not just crossing $100 per barrel, but I think on 2nd April it reached $128 per barrel. And before the war, the stable level was about $70 per barrel. So I think it's gone bad. But the slightly encouraging news is that International Energy Agency, IEA, they have announced a release of out of their reserve stocks almost 400 million barrel, to offset the supply shocks and so on and so forth. So if that happens and some alternate routing which is being attempted and so on and so forth, I think if you look at the Brent crude oil forecast overall, if you look at for the average for the current calendar year, which used to be $79 per barrel before the war broke out. Now the revised estimate is about 96 barrel, $96 per barrel, But the immediately ahead, for the week, I think the range will fluctuate quite a lot. It is expected to be anywhere between $85 to 109 to 107 to $109 per barrel. That's going to be the range. But average would still be slightly less than 100. That's what I feel, after the extension of ceasefire and also, this release of the emergency stocks of oil. So I think average will be, between 97, 98, around that level, dollar per barrel kind of a thing. That's my take on what the immediate forecast is.
All right. So for more latest levels, we could look at average prices of $97 to $98 per barrel. That's the word coming in. However, it could range anywhere between $85 to $109. That's the range that Mr. Jain, you said that you're looking at. But if we talk about oil, it has turned from being the superpower of Gulf nations to a pressure point now. What is your take on that? How should we deal with that situation?
Yeah, so that's really ironic. As I said earlier, that almost 34% of the world's crude oil comes through the Strait of Hormuz, and 20% of all oil categories put together. So I think the countries which are impacted the most are China and in India. So I think currently what it appears in negotiations, you always talk about a BATNA. BATNA is nothing but an acronym for best alternative to negotiated agreement, right? So Iran, as of now, continues to have a strong BATNA by continuing to block passage through the Strait of Hormuz. Holding the world to ransom, right? So I think I see the encourage by President Trump, the extension in the ceasefire and a unilateral extension till the time they receive a revised package offer from Iran for negotiations. I think it is encouraging. But I think, as I said earlier, this is a war which nobody is going to win. So I hope all two or three parties realize this and eventually, call it a day and have a... See, in today's day and age, countries do not necessarily get what they deserve. They get what they negotiate. So I think they have to be back on the negotiation table. It is really, unfortunate that the second round of negotiation, which was to happen in Islamabad, has been deferred indefinitely. But I think Iran really has to do some serious soul searching. That what are they gaining by extending, if the war continues, or even if the ceasefire continues and the hostility continues, So I think they have to be back on the negotiation table sooner than later. That's what I feel, because just banking on your strong negotiation BATNA will not take anybody too far.
Right. Like you highlighted, US and Iran must be back on the negotiation table to help stabilize the oil market. That's the word coming in. But for now, China and India are among the most impacted nations because of the disruption in oil supply. Thank you, Jain, for joining us today and helping us with all of those insights.
A pleasure.